Today we cover Warren Buffett, from Paperboy to the world's most famous investor. This is not just a success story. We cover his philosophy, his biggest mistakes, lesser-known habits, and real controversies. Buffett is called the Oracle of Omaha, the face of value investing and compounding. Education only, not buy or sell advice. Buffett's journey was not ordinary, but not a Hollywood movie either. At age 6 he bought Coca-Cola six-packs and sold them door to door, an early business instinct. As a teenager he ran newspaper routes and pinball machines, reinvesting every dollar. Lesser-known fact, Harvard Business School rejected him. He then studied under Benjamin Graham at Columbia, who defined value investing. In 1965 he bought Berkshire Hathaway, a struggling textile mill. Today that shell is one of the world's. Buffett's core philosophy rests on three pillars. First, circle of competence, invest only where you have real understanding, put everything else in the too-hard pile. Second, economic moat, brands, networks, or cost advantages that keep competitors away for years. Coca-Cola and Apple are examples. Third, margin of safety, Graham's idea of buying below intrinsic value so mistakes can survive. Buffett added that a wonderful company at a fair price beats a fair company at a wonderful price. For retail investors, Berkshire Hathaway is not just a stock portfolio, it is an insurance float-powered conglomerate. Buffett acquired Geico and other insurers. Premiums arrive before claims are paid, the float in between gets invested in stocks and businesses, almost like interest-free capital. That funded Coca-Cola, Apple, railroads, and utilities. Lesser known, the Omaha annual meeting draws tens of thousands of shareholders, called Investor Woodstock. Charlie Munger partnered for decades, a duo of rationality and patience. The lesson for everyone, capital structure. Buffett's famous bets are case studies. Coca-Cola in 1988, global brand moat, pricing power, repeat purchase, he invested billions and held for decades. Fun fact, Buffett is a huge Cherry Coke fan, reportedly 5 cans a day. American Express, he bought during the 1963 salad oil crisis crash, classic buying fear. Apple, he avoided tech for years but later built a massive position seeing a consumer ecosystem moat, critics said too late, returns were still historic. Lesson, identify the moat. Here are viral-worthy lesser-known facts. Buffett still lives in the same Omaha house bought in 1958, no mansion. Breakfast is often McDonald's, the wallet coupon story is famous. The Cherry Coke obsession is real, crates at Berkshire meetings. He is a passionate bridge player, including with Bill Gates. Reading habit, targets hundreds of pages daily, compounding knowledge. He used a flip phone for years while the world went smartphone. In 2010 he joined the Giving Pledge with Bill and Melinda Gates, over 99% of wealth to charity. Buffett is human, mistakes happened. Dexter Shoes, he calls it his worst deal, roughly a $3.5 billion lesson, misreading competitive advantage. The 1991 Salomon Brothers scandal, Treasury bidding crisis, Buffett became interim chairman to save the firm, real reputation risk. Airlines, he bought stakes then sold during COVID, timing controversy. Kraft Heinz saw billions in write-downs and backlash over the 3G cost-cutting model. Tech misses, ignoring Google and Amazon early was a circle of competence choice, but opportunity cost is debated. Look at controversies with balance. Climate activists criticize Berkshire's BNSF railroads carrying coal, green transition versus legacy assets. Kraft Heinz job cuts and 3G/N-burn culture drew social backlash. Buffett says the rich should pay more tax. Critics note Berkshire legally minimizes taxes via retained earnings and structure. Hypocrisy debate, not a legal verdict. The Occidental Petroleum bet from 2022 onward cheers oil bulls and troubles climate advocates. Bitcoin as rat poison squared offended crypto fans and pleased value investors. Insurance claim delays are a sector-wide scrutiny issue. Buffett is also a symbol of wealth inequality, frugal image, practical lessons for retail investors. Start early. Most of Buffett's wealth compounded after age 50, time is the biggest asset. Read annual reports, books, industries, build mental models. Circle of competence, follow 20 stocks well, not 200. Say no to most ideas, Buffett's cricket analogy, swing only at the right pitches. Avoid leverage, the tax on impatience. Simplified Buffett Playbook, SIPs, index funds, quality business. That wraps our Warren Buffett recap, from Paperboy to Oracle of Omaha, covering philosophy, secrets, mistakes, and controversies. Next up, Charlie Munger and mental models. Subscribe and comment who we should cover next, Benjamin Graham, Peter Lynch, or an Indian legend.